From the world's mobile travel leader in China, to inbound visitor-obsessed Japan, to chaotic growth markets of Southeast Asia, APAC is an incredibly diverse and fast-changing region. It also has recently placed North America as the biggest region for travel startup funding since 2017. Here to discuss what to expect from the East, please welcome our panelists. Mizuho Hiraguri, Corporate Development at Recruit Holdings. Welcome, Mizuho. Ben Johnson, Partner, Vitruvian Partners. Andrea Traversone, Partner, Amadeus Capital Partners. Welcome, Andrea. Welcome. And finally, Lin Xu, Asia Partner and Advisor for Cambon Partners. Welcome, Lin. Everyone have a seat. Thanks. So, as I was alluding to, it is really tough to talk about Asia because it's so different country to country. And Mizuho, you and I have talked a lot about this the last 2 days. So I would love to start off and just hear from each of you, where in the APAC region, what country are you most excited about from a travel tech standpoint right now, and why? If we could maybe start from the far end there.
I think there's no choice. China, that's where I am from, and I'm most familiar with.
And what is, because part of the perception in China, of course, is that C-Trip is so dominant and it's a little tough for a startup to break in. So what's exciting and dynamic about the market for you?
Well, C-Trip is dominant, but that's, I would say, in the online travel space, and it's in the B2C space and distribution space. But in China, the online travel penetration is about 15%. So the vast majority of travel is still offline. And distribution is only one aspect of it. And recently, for example, the emphasis is mostly on destination, upgrading of products and services, and improving the connectivity or of the industry chain. There are many areas that are actually quite
so lots of problems to solve at various points of the journey.
Exactly.
Andrea, where are you excited about right now?
The two countries that at the moment in that area we're more excited about is Malaysia and Vietnam. Malaysia, because it's actually a pretty sophisticated consumer already when it comes to online behavior. It's a pretty rich consumer with significant purchasing power. Vietnam, because it has an amazing middle class that is growing incredibly fast with a lot of innovation, a large expat community of very sophisticated engineers. So it's an area where we have invested and look to invest more.
And how do the challenges differ when you're looking at Malaysia versus Vietnam?
Vietnam has some of the most similar dynamics, I would say, to China. Malaysia is probably, I would say, somewhere between Singapore and India in terms of consumer behaviors. So average basket values are obviously lower in Vietnam, but it's very fast transactions. So it's all about volume and scale. In Malaysia, it's a lot more about product management and sophisticated product management. So those are the two different dynamics that we see.
Ben, where are you most excited?
I think it's hard to look past China in terms of the scale. I mean, the number of, as they call, decacons, 10 billion plus companies, the size of the funding rounds, the size of the engineering teams, the product innovation that's coming out of China, by weight of numbers, it just dominates, catches the eye. But as I think we're hearing, there's a lot of regional diversity in the user experience and the user patterns. But when it comes to travel tech, I think it's all coming out of China.
So if China's the tip of the iceberg, it's a humongous
It's a big iceberg.
Yeah. Mizuho, where are you most excited about right now?
Yes, of course, I cannot also miss the China, but there is a specialist to elaborate those great countries. So I put some focus on the Thai and Japan. So recently in Japan, the inbound grows just led the great growth of the startups and accelerated them. So a lot of the very unique content business is now growing there. And also Thai is, as the Andrea mentioned, the middle class is now growing, and the really highly educated young generation is there. So they are very much sophisticated about technologies and other devices. So really interesting.
How is the Japanese government and the travel industry, as you just alluded to, is incredibly focused on the inbound market because of the economic situation, the demographic situation there, and very aggressive goals in that department, and a great place to visit, I have to admit. How does that inbound focus affect the way that the environment is growing?
Yeah, thank you. It is huge, actually. It's now at the border, we count 30% is now the foreign tourists per day, and also the visitors, it's now counting 20 million per year. So it's counting 50% of our population. So the government put a huge potential and put a lot of investments, especially on the transportation, because we now develop a new bullet train for foreign tourists, and even for Wi-Fi also.
And when it comes to the startup community, is there a lot of focus on that inbound traveler now, or how is that evolving?
I think a lot of the, as I mentioned, content business to break the barriers about the language and the cultural differences, and also, the Japan is very much high context communication style we have. So to introduce how it works for foreign tourists there's the massive startups there.
Great. Now, I think we had a slide that was just up. I'd love to have it to look at again, and for the group here to see on funding. Mike shared this during the innovation portion of this event a couple of days ago, and here we see. So this is the share of travel startup funding globally, measured over time, and each of those bars is actually a shorter and shorter period of time. And Asia Pacific is in yellow. And you can see it went from, in 2008 to 2011, just a tiny share of funding, and then moved up to close to parity with North America, and now has become the biggest region in the world. These numbers are nice to share and to look at, but I wonder what are the implications for this in terms of innovation coming out of that region, and the next big thing that's unseen coming out of China or of Southeast Asia or Japan. Ben, have you?
This is exactly, I think, what we were hinting at earlier. The health of the travel tech ecosystem, particularly in China, is incredible. These figures tell you that you've got a healthy ecosystem in the US and Europe and Asia, and that race is the dimensions are changing, where the innovation race in Asia is getting ahead of where it is in the rest of the world. And that race, builds upon itself. So if you have teams that spin out of highly performing organizations like C-Trip, then access deep pools of funding, they sustain that ecosystem even further. And I think, you combine that with a large domestic population, all the mobile integrations and WeChat and everything else we know well. Now these are, these leads build upon other leads. And I think that's why it's reasonable to assume that particularly China becomes the leading source of innovation in travel tech globally. And I think we're seeing that. And I think it's very hard for a business that's based in the Valley, let's say, to penetrate the Chinese market or other Asian markets from the skill set and experience of the US. So I'm very bullish on the travel tech ecosystem in Asia and actually in Europe. But I think it's quite clear that the US has not consistently outperformed in travel tech ecosystems compared to the rest of the world, as it has in other things like social media. I think that's very interesting.
Lin, being based in China and having led some startups in different ways over the years there, what do you think, with China becoming so much bigger and ahead in terms of mobile by leaps and bounds of the rest of the world, how might that influence the online travel world going forward? So certainly bigger, more significant, but what types of behaviors or technologies that are sort of underutilized in the West is China taking a leading position in?
Well, before I answer your question, first of all, I wonder how do we define these numbers of startups? Yeah, because in China,
That was fun. That was funding. Yeah. So.
yeah, I mean, just the funding aspect. Last year the WTTC said that China has an overall travel investment of 154 billion, but the Chinese government announced the number is 234 billion. There's a huge discrepancy, and this funding go to different aspects. Relevant to your question, actually, it's not just in pure in online distribution or travel, travel tech. There's also technology in different aspects in the whole industry chain, and I wonder if can you specify like what exactly in your question? What do you want to?
Just what are the next, what are the next innovations that we might see out of China? Where is China already ahead? Clearly on mobile, usage of WeChat really changes how you interact with the phone. The funnel for travel is completely different.
The disruptors are always outside. Mm-hmm. So just like Fritz mentioned, with the mobile payment, with the new e-commerce platforms like Meituan, Fliggy, the disruptors are not exactly necessarily in the travel industry. And in the travel industry, Ctrip with being a dominant player, it actually pushes innovation, whether from within or outside, to go basically compete with the giants. So, for example, Meituan last year, they kind of exceeded 200 million room night sales. So. That's
and the Meituan situation is interesting. I think it's a little bit out of the scope of where we're going right now with this, but I do want to briefly touch on that because if you're working in the business in China right now, you have to have an opinion on Meituan. And how much of a true challenge do you feel they represent to Ctrip in that market?
I think the Chinese or Asian consumers have the habit, or kind of they're spoiled to do. They have the habit of doing last-minute booking. So as I heard that in Ctrip you book a product maybe 10 days before your consumption, but in Meituan it's 7 hours. So
as an average, and a lot of 20-minute, 30-minute, right?
Yes.
Yeah.
So that means that kind of trend lead to a lot of instant booking, real-time inventory, and the user experience needs to be super fast and seamless. So that's for me. That's where the opportunities are.
And the speed that's expected, the immediacy. So, and you bring up a great point, which I would love to hear everyone else on, about visibility into markets in Asia. You mentioned how confusing some of the data can be and conflicting. And when I imagine that looking at countries such as Indonesia can get really difficult to get insight on the region. So I'm curious how each of you are approaching parsing opportunities and separating the wheat from the chaff based on data.
Well, you have to have some presence on the ground or something close to it. I think that also what's happening that is not visible in the data you were showing before, if you actually had a flow of capital, where is the capital coming from investing in those companies?
Exactly.
You'll see that a lot of it comes from China, right? So actually directionally it might be correct, but you don't pick up the speed from that chart of what's going on. I mean, to give you an example, you just need to look at the 600 million investment by Didi in Brazil, in the Brazilian taxi sharing company. And we see that in many markets, particularly in Southeast Asia. So the other thing that you have to be very careful is the influence of these Chinese strategic players on the local market. Because they're very aggressive, they're very fast, they move immensely faster than us as VCs. They know their industry, they can make decisions faster, they're smarter than we are on their industry, for sure. And actually, interestingly, what I discovered is that they have a longer time horizon than we have, right? We live with a horizon of 10 years for our fund lives. These investors, they look 20, 30 years down. So they can outpay us every time.
So is taking Chinese capital for a startup in the Valley or here in Europe, are you seeing attitudes shift around the desirability?
Yeah, I was discussing last night. When I started in venture 20 years ago, the entrepreneurs were always looking at the Microsoft, the Cisco, the Oracles of this world. Most recently, they look at Facebook and Google and Amazon. Now when we talk to smart entrepreneurs, particularly from emerging markets, they don't even think about the US. They just look east. So they want to get close to Tencent, the usual Chinese players. And that's an attitudinal change that is starting to creep into Europe, but more slowly than I think it should.
So there's a value to the relationship on top
Absolutely.
of
Those are the new icons that everybody wants to copy.
I'm curious, Mizuho, how are you evaluating, looking at countries within APAC? As Lynn mentioned, data can be hard to come by or clarify.
Yeah, it is
How do
true.
you deal with that?
I think it's true. So, and the circumstance is very different from the Western countries, and the Eastern country would be the Eastern countries more operated by horizontally. So the people are moving and changing their department and position like every 3 years. So the VCs in the let's say US, they will stick with that, the VC networkings. So you can touch them at any point. Okay, so 5 years later, or 6 years later, maybe he might be there. But in China and India and Japan, the people are moving around so much. So the networking is follows the numbers, of course, and then to set up the right due diligence and to have the great insight is really, really important to see the environment.
So be people on the ground again.
Yeah.
Ben, you were involved in, as long as we're talking about investment coming out of China, you were involved in the biggest strategic investment to date with Skyscanner and C-Trip. Have you experienced, or did you see in that deal or after that deal some of the effects that Andrea mentioned, that being close to a Chinese company in that way can benefit a company based in Europe?
Hugely. I think Gareth and the team, I know Philip was here, I mean, he should speak on this. I mean, it's a hugely ambitious team at Skyscanner, and they were looking for a hugely ambitious partner, and I think in C-Trip they found that. When we dealt with C-Trip, we were astonished by the extreme professionalism, the extremely high ambition. And this is a $20 billion NASDAQ-listed company. It's a significant global business that happens to also be the leader in China by a long distance. It's an exceptional company. I think it's a matter of record that we took stock, as did many others, in C-Trip after that transaction. We remained very bullish on C-Trip. But I think, it's very hard. I mean, if you think about the West, US and Europe, it's generally quite easy to penetrate those markets as an outsider. It's sort of obvious it's not easy to penetrate many Asian markets without the support of an insider. And therefore, Skyscanner, a business with a very clear global ambition, had tried for many years to make good progress in the Asian Pacific markets and did very, very well, but obviously recognized that to become a proper global leader in metasearch, it needed to ally itself with the clear market leader in online travel in China. And I think that you don't feel like you have to be in bed with Google in the US to win in the US, right? Booking and Expedia do just fine without being in partnership with Google in that way. But I don't think you can make the same case about China. I think you have to be bound closely to that market leader to have any chance of becoming relevant over the 10, 20, 30-year horizon that companies should aspire to build their strategy.
That makes me think about Airbnb. They are very loud very vocal about their efforts in China, and are not working to date with a local partner in the market. Their co-founder is sort of leading the team there from Silicon Valley. And of course, there's an existing player in the market, Tujia, which is more, a completely different model and a little bit more HomeAway-like. And then there's a couple of smaller ones, Maggie, which is part of C-Trip, Xiaoju. I'm curious from inside that market, mostly on Lynn's perspective, on Airbnb's prospects at growth for a domestic market in China.
I think they are doing quite a good job. But the controversy starts with their Chinese name, by the way.
I being?
There's a lot of discussion about how this name would fit. But
And is it a problematic, offensive, just weird? What's the?
It's well, a lot of travel professionals give other opinions about how this name should be translated.
All right, ask a Chinese friend.
But I think there are a lot of, I mean, you mentioned a bunch of domestic players, whether invested by Ctrip or not. They are very adaptive and flexible in terms of doing business in China, and integrating a lot of time in, partnering with real estate developers, integrating their own property management system and property management services, etc. And I think their value proposition is quite different from Airbnb. And foreign players being quite, growing quite substantially in China. I think foreign players, to win a piece of that market, needs to play their own strength. Well, I think to answer your question short, and also I agree with what Ben said earlier. You need to partner and invest smartly with local players, but they are not just Ctrip, Meituan, and Fliggy. There are many other players that are not here and not present, and but they're really interesting and very savvy, and I think if you look deeper into that market, especially in offline space, you could find interesting dynamics.
So, and looking at private accommodations more broadly across the region, we've seen a lot of money raised globally in private accommodations. And in China, we mentioned Tujia, a unicorn, which has also acquired Maggie. In Japan, Airbnb-style private accommodations are now fully legal and regulated. And in Southeast Asia, HomeAway acquired TravelMob and is active there that way. But it still seems a little unclear what is the prognosis for private accommodations across Asia Pacific. Is there demand for the markets within these countries, not just for travelers to them? Curious about perspectives on that.
We see more traction in this hybrid hotel management business model that we are actually quite excited about. There are companies like Oyo Rooms or Red Doors in Indonesia or Tribo in India that are doing extremely well. It seems there's a weekly migratory market, people that go sort of Monday to Thursday, Monday to Friday to a different city to work. And they tend to stay in 20 to 50 room properties, which are owner managed. And now there is these digital franchises that distribute these online, and they're doing really, really well. So we tend to see a little bit more traction in that space, maybe because it's easy to acquire the rooms from an inventory point of view.
And that model really took off in India with Oyo. Are you specifically talking about India or also?
No, we're seeing it taking off in most of Southeast Asia, and we are starting to see a couple of equivalent companies in Latin America, basically.
How do you think it's going to go in Japan with Airbnb?
All right, there's massive demand for Airbnb, of course, and there's some local players there. So after the government officially recognized it is okay, so it's huge need there. So there's such kind of the accommodations there, even before officially allowed.
Great. I'd like to also look once more at a data slide, the funding versus founding slide. So for the startups that we tracked globally, we looked at the size of funding, the amount of funding has gone up quite a bit, while the number of companies founded has gone down. This is on a global basis, and I'm curious if this looks incredibly inconsistent with what you've seen in any specific markets within Asia. Does this look backwards, or does this look like it's the same story there? Maybe we can just quickly go down the line.
A little bit against it, I think, especially in China, and if I included India, can be a little bit.
Okay, Ben?
I think it's absolutely true that the minimum efficient scale of funding has dramatically increased. I mean, if you go back 5 years, a Series A of 5 million was a good number. I mean, people are raising Series Bs of 50, 100, and even more than that in Asia. So everything's just become dimensionally bigger. We'll see whether that means these companies end up being much more successful, or much more lean and strategic. Time will tell. But certainly, founders don't go around with a pitch deck for 2 million anymore. It starts at 20 and probably quite quickly at 200. It's all complete. Is it top of the market, or is it just a new paradigm? I think time will tell.
Andrea?
Yeah, we see very much the same thing, particularly skewed in India, although gravity is starting to apply there too. But Southeast Asia is the new India. So to give you an example, we did a transaction not long ago in Singapore and Thailand. It was October last year, and it started being a $15 million round. In February, we closed, and it was a $55 million round. And the company is profitable and growing very fast.
Lynn, does this reflect what you're seeing in China?
I think it depends on the fields of investment. Nowadays, you have sometimes a concentration of investment in theme parks or in the supply chain, which starts from a very high number. The A round could reach 50 million. So I think it depends on what you are looking at in the industry chain.
So varies very much by sector and by function and where in the chain you are. Great. So I think we're out of time for now. I could talk about this for another hour, but thank you very much, Mizuho, Ben, Andrea, and Lynn.
Thank you. Thank you.